Alright guys, welcome to the live room. Hopefully you're doing well. How's everyone doing this morning? Let me know. If anyone has had a good week trading, let me know. If anyone's had a bad week trading, let me know. If you're in any trades, let me know. What's going on? Oliver Milne's in the house. Chris is in the house. Welcome, welcome, welcome. Morning, Lewis, Sina, Dinesh, Femi, Hassan, SJ, Chris, Martin. Loads of people rocking up. All right, so we've been kind of going all out with the live room this week. Reason being, a couple of things. Tuesday, it cut off. Wednesday, we did a good stream. We had some great discussions, great feedback as well. The reason I wanted to stream today is because there is a lot of people asking about the YouTube video on, on the prop firm, and we've had some issues with YouTube. That's the truth. I don't know if it's I've got a feeling that it is something to do with the music that I was using on my hold before that wasn't royalty free, and then they kind of degrade your channel, if you like, and maybe they're doing some checks on the channel. But Akil said he had some problems uploading as well, so we've had some problems uploading, but it does seem to be resolved now. So today that video will be out. I wish I could promise you, but I'm 99% sure that it will be released today. All right. And if you didn't check the Trader Coffee Break yesterday, myself and Akil were talking all about post-market analysis. So if you're working on your trading, that is a great thing to know. That is a great topic to master. And if you don't believe me, go and check out that quick 25-minute discussion that we had on post-market analysis. And I'm sure it will change your mind. Some light bulbs will go off and you'll realize the importance of that and the impact that it can have in your development as a trader. How is everyone? Duncan's here, Paul's here, Jeffrey's here. Enjoying these sessions, says Lewis. Yeah, Lewis, appreciate you showing up. A couple of things to mention today. Today we've got obviously the Always Free show will be on later today, 8 p.m. UK time. And we'll be talking about all things wealth creation, financial empowerment. But we're also running our first strategy session. Okay, so we're running our first wealth strategy session for March. There's only going to be there's 3 of them. And if you ever want to learn more about what it takes to become completely financially free, and you want to plan for you, a long-term plan, 3-year plan to become completely free in 3 years, that is what that strategy session is geared to do for your bespoke situation. So it's a small group of people. We work with them. I work with them. And you can go and book one of those spaces. The first one is today at 5:30 UK. So if I just show you guys, this is the booking page right here. I will post in a link into the chat right now. So there's the link. You can come along and join us for that session if there's some spaces left. You can see there's one tonight at 5:30 p.m. UK time. Then we've got one for you guys that are maybe on the other side of the world at 9 a.m. on Saturday morning. And then we've got another one, which is our last one at 5:30 UK time next Thursday, which would be the last day of the month. And funnily enough, that's the actual intake date for our Tears of Freedom program as well. The only way you're going to learn more about the Tears of Freedom program is what I share with you towards the end of that session as well. So that's the only way you're ever going to learn whether that's for you or not, how to get in. We keep it very, very under the radar deliberately because we want to work with people closely, make sure that they get results. So that's that. Let's get that out the way. And let's take a look at some of these markets. I've got all the drawings left on here because I've been using the Trade Nation platform for all my analysis, but I want to flick through just quickly to see what happened. Cool. All right. So before I get on, Has anyone got any setups? Oliver Milne says, I'm looking at the daily reversal for my next strategy. Would you mind going into a bit more detail with the MACD? I never really used it. Cool. Morning. I've got a bad rotator cuff injury. I've had it for quite a few years now. And it's just agonizing to move my shoulder, which is annoying when I go to the gym every day. And I'm sort of in that place. Has anyone had a rotator cuff injury? It's like, do you get it repaired or do you wait? But the longer you wait, the less chance they've got of kind of repairing it properly. And when you do repair it, you have to have 6 months off training, which I'm in the middle of a body transformation with my son and everything. So it's like it's a catch-22 situation, but God, it is so sharp, the pain. Stephen's got one as well. It's the cold that gets me. Yeah, it's just it's not much fun. Cool. Let's get stuck in then, shall we? As I say, Thursday's normally a bit of a summary day, all right? So I'm not expecting a long session today. We'll just go through the pairs, look at what happened. Actually, we'll be doing post-market analysis today, which is kind of what we was talking about yesterday. Looking at what happened, what can we glean from it, what can we build to our discretion as traders, what did we think was going to happen, what did happen, align those expectations with reality, neutralize your emotions, neutralize refine your skill, refine your edge. Post-market analysis really does two things. It serves as a market discretion and a self-review discretion. So you're reviewing yourself and you're reviewing the market and you're comparing performance and you're growing and developing by carrying out post-market analysis and journaling. So I highly recommend you go and watch the chat we had yesterday on the Trader Coffee Break channel. Just type in the Trader Coffee Break into YouTube and subscribe to the channel. I promise you'll enjoy it. I promise you'll enjoy it. And there's loads and loads and loads of other videos on there as well. Those of you who are like to be immersed in your trading, like most people, if you go to this channel here you can see it, right? So this is the post-market analysis. We've got drawdowns, over trading and under trading, multiple trading accounts, money management, market fundamentals. We've done chats on market manipulation, crypto, funding challenges, how much to trade for a living, are you cut out for trading, mindset. We've done strategies, edge development, mistakes, platforms and apps. We've done mentors, books, accountability, pretty much everything. How to get into trading the right way, and lots of valuable discussions there. They're all about 20 to 30 minutes long, as you can see, and really love it. Really love that show. It's a great resource for new traders or existing traders. So go and check that out. We are going to start on the Aussie CAD daily, and we're going to work down towards the 60-minute time frame, maybe the 15. And we're going to be seeking out trading opportunities that we've been looking at and ones that are playing out currently. You can see this was the pound Aussie trade. This was kind of the one we were looking at last week. We also had a hold of this level. Look at that. Pound yen, I said it's important that you wait for the close of the daily because that's going to determine whether it is going to hold or not and where to put stops and things like that. We actually, this was actually a neutral candle. I know it's a doji and it could be considered for a 3-bar reversal, but it's actually a neutral candle. Does anyone know why it's a neutral candle? Meaning it's not bullish or bearish. Morning, Justin. Hope you're all well. Morning, Vet Trading. It's a neutral candle purely because it's the close. You know, when you look at the close, if we're in the middle third of the candle, that is the that's a neutral candle. It's neither bullish or bearish. If it was a bearish candle, the close would be in the lower third. If it was a bullish candle, the close would be in the upper third. If it's neutral, it's in the middle. However, if you're using, your understanding of price action patterns to your advantage, you can see following off of this bullish run, massive bullish momentum, we hit this major structure level at 160 flat, and then we put in an indecision candle. This is a neutral indecision candle where we've had equal tests of highs and lows, and then a slightly bearish close. What that means is there's a strong indication we're going to hold this level, or at least pause and see some consolidation there. All right, so that when you can combine that, reading that story and that price action pattern and that candlestick formation and put it all together as a story of price, that is what reading price is, and that's what allows you to become better as a trader, become more discretionary as a trader. I was talking yesterday about discretion and how we kind of, discretion always comes last. It's not something you start with. Discretion's something you add to kind of fuel your system. It's not something that you just think, oh, do you know what, I'm going to build my whole system on what I think's going to happen and just learn the markets. You can't do that. You can't do that. So, and if you do, it's going to take you years and years and years, and it's going to cost you a lot of money. Okay. So, I think we're good to go. No one got any other setups? I think Oliver Milne said he's got, he's looking at daily reversals, so he's practicing. Anyone else got any setups? Nice double top forming on the 4-hour pound yen, says Duncan. Yeah, look, so let's go into the pound yen first, because let's be honest, this is one of the juicier setups, right, for today. If anyone's been tracking the pound pairs, pound dollar is a nice, we've got some nice movement. Pound Aussie, we've had some nice movement. There's a potential short opportunity here, which I'm going to be looking at maybe tomorrow, maybe today, maybe going into next week. And then pound yen. So that's the kind of juice. The other pairs, the Aussies are flattened out. The euro isn't doing too much. Dollar yen, there might be an opportunity there. And then New Zealand dollars, just, again, we've hit that level of structure. And it's not a level that I would get excited about. But, some of you might. My son gave me these chewing gums. And, oh my... I think they're new, but you need to try these. Is anyone... I don't really chew chewing gum that much, but we've got these Wrigley's Extra. They are the... you see that? They're the blueberry ones. Oh, my. I feel like I've just gone into Willy Wonka's, when they give you the sweet and it's like, your mouth explodes. Your senses explode. Lewis says, for me, currently in a NAS long position from yesterday. In FX, I have eyes on New Zealand CAD, the 87.20 level. I need to see some development around that level to get long. What specifically would you be looking for at that level? Butterfly on the Aussie CAD, 4-hour complete, says Stephen. Yep, I don't trade butterflies, but we'll take a quick look at that before we do the analysis on the pound yen, because it's a lot quicker. So what's Stephen Woodford? If anyone's familiar with butterfly patterns, when I was last in Las Vegas doing a Traders for a Cause conference, I was speaking to one of the prop firm traders there. Him and his team only trade butterflies. And they do very, very well. This is the pattern. My problem with it was always that the D completion is beyond the X point, which means it's a problem for getting consistent stops in place for me. And I was testing different things. And I just I just gave up testing them. I went on to something else, and then I had enough to get on with after that, and I never really went back to them. But yeah, butterfly pattern there, complete. Looks like it's rolling over as well. So hopefully, if you're in that, it goes in your direction. Let's take a look at the pound yen. So pound yen, just to kind of recap them before we drill down and look at the actual entry, we're using IPDE, which stands for Identify, Predict, Decide, Execute. All right. Now, this is the daily time frame, which we're using our identify phase for. And this is, we've already identified we're at a major level of structure. Looking left, previously, we tested this level last in 2016. We held, and prior to that, it was back in 2013 where we held. And we haven't tested it since 2016. Right? Which is 6 years ago. 6 years ago? Yeah, 6 years ago. Almost. Now we're testing that level. As we've approached it, we've got this strong bullish momentum, which we know doesn't go on forever. So that's likely to see a hold. Okay? Especially following this last candle. As we close, we hit that level like a wall, right? Which also happens to be an even handle number of 160 flat. So we've got a psychological even handle number. We've got major structure. We've got a long bullish run, and sorry guys, my throat's playing up, and it looks good, right? It looks like a decent place to look for a counter move. We've also got some nice room for potential profits, because we can be a little bit more aggressive with this based on historic tests of this level. We haven't tested this level for a very long time, and every time we tested it in the past over the last decade, which has only been a few, which has been a few times in the last decade, we've seen quite a rollover. So what does that mean? It means that if we're going to get in, we could potentially get targets just above this resistance level, okay, which is where we've got our indication here. So identify, we're at structure, major structure. Predict, price is likely to see a reaction at this level, which we're seeing. Yesterday's candle was an indecision candle as well. Even more into the case, right? So now we just decide how we can get involved. And if we go down to the 4 hour, this is where we'd be looking for a double top. This is exactly how we can enter this. Okay, so all we need for this to be a valid double top is we need a test of this high. You might want to write this down. We've got the initial test here, okay? So we've got test 1. Remember, a double top is 2 tests. That's why it's called double. So it's 2 tops. And what a top is an area of the market where we don't violate previous structure, okay? We know on the daily time frame we haven't violated that high. We are, we've seen this 3-bar reversal here, which could have been the entry we was talking about yesterday, although you wouldn't have got your 1-to-1. Remember I said you have to wait for this to close? Look, if you had entered on the close of this candle, you wouldn't have got a 1-to-1 risk reward. So that is the discipline that's required to keep trading a plan that is in favor of your edge, right? Big reward to risk profiles, tight stops, high probability. So, you might have had the high probability, but you haven't got the tight stops. You haven't got the good reward to risk. So now what we need to do is look for a double top, or what I need to do. And whenever I'm talking, guys, I'm talking about me, right? Rudy says shoulder pain, use RT4 Plus. Any good? I hate taking things that just mask pain though. Is it just like painkiller, or does it actually like do something? Morning, Chris. So here we go, right? We've got the initial test. RSI is massively, massively overbought. Up at 96. If we're overbought at 96, and we've got divergence here, if we get equal tests of price and bearish divergence on the RSI, that indicates for a very, very nice double top. Now, have we got a double top at the moment? Have we got a double top at the moment? No, we haven't. And the reason we haven't is because the rules of a double top are as follows. In order for this to be a valid double top, we have to test the highest high, but not close above the highest high. All right. And the highest high is considered the wick, the whole wick of the highest high candle. So basically here. So this candle has to test this green zone, but not close above it. If we close above it, we've put in a new high. That's a break and close above. So we need to test it, but not close above it, the top of it. Make sense? So just to really kind of crystallize this, this is the high of the zone, which we can't close above, this red. And this is our total zone, if you like. And if I can just click on this, we'll make this blue. Okay, so we need to test the blue zone, not close above the red zone. So as long as those are met, this is a valid double top. Now, the problem with that, there's a few problems that you could encounter with that. So there's our zone, okay? Let's just delete all this off. This is what we're looking for. Let's just really drill this down so it makes sense. Is this making sense to everyone so far? This is the zone we're looking for a test of. Okay, I'm trying to draw it out as clear as possible. Whoops. Okay, now the problem that we can face, and the reason why it's important that we're patient and we wait for that series of rules to be met, is because these candles can form in different ways. So the candle can actually form, and I'm going to draw different examples now of what this candle might look like. It could look like this. Okay, it can look like that. Why can it look like that? Because we've tested the previous high, but we haven't closed above it. It can also look like, this. Make sense? It can also look like this. So you see how what you got in your head as a perfect setup doesn't always play out. It's much more uglier in real life. And refining your eyes to read price action patterns and having consistency around how you define certain price action patterns is what's going to keep you profitable. Not only, and the reason it's going to keep you profitable is because it's going to keep you on the high probability side of the markets. All right. What wouldn't be valid is this, because we closed above. Right. Now, another thing that could be valid is we could do this. And look, we could push up, test it, and we could do something like this, right? And this could be a red candle. And the problem with that would be we have to enter at next bar market. So you have to wait for the candle to close to confirm that it's a valid second test, which means you have to wait for the session to close, which means that your order entry will be down here. So it's lower. Make sense? Which then, decreases your reward to risk profile. The other pain in the butt is this could be a green candle. Could be a green candle, and we could close like this, and that's great. But the wick could spike up, which means, again, it decreases your reward to risk profile because your stop has to go above the high. Make sense? So there's a couple of things. That can really hinder you and your approach to double tops. So you have to have all these rules that make sure that you, one, get involved with high probability setups. Two, have the risk reward profile that you like. Ideally, at least a 1-to-1. And if you've got a 1-to-1, you want to have a high strike rate. All right, if you've got a 1-to-1 setup every time you take a trade and you're right 50% of the time, you're not going to be profitable. All right, you're going to break even. If you've got a 1-to-1 setup and you take 1-to-1 setups every single time and you're right 55% of the time, you can make that very profitable. Right? Now, if you're only right 3 times out of 10, but you've got a 5-to-1 risk reward profile, you can be profitable. Scotty Gaming says, if it was a wick like that, I'd wait for another candle going down for extra confirmation. Yeah, and then there's, of course, reading price and then building conservative entries into that as well. So depending on how you close, or depending where you are at structure, or depending on how high you've scored the structure level, how aggressive you can be on the entry, or how conservative you can be on the entry, you might have to wait for added confirmation. So you might wait for a 3-bar reversal on the second test, or you might wait for what we call a 2618 setup. And the reason it's called a 2618, let's just say 2618, this is basically just a way of trading a failed high a bit more conservatively but consistently. And the idea is that you're waiting for a double top. Okay, so you've got the retest here. You've got test 1, test 2, and then what you're waiting for is confirmation that we're likely to push down. So Scotty Gaming just said he likes to look at the wicks and then wait for another candle, like a 3-bar reversal or something. The other way you can do it is wait for a break and close below this retracement. Okay. And then if we get a break and close below that retracement, you wait for a pullback into a zone in here. Now, some of you like to look at the kiss of death trade, which would be a test of the high again. So a third spike right up, and you normally get a high spike on that. I was actually asking you. Yeah. So I'm just running through different ideas here and what you can build into your trading plan. But the 2618 stands for 2 tops and then a 618. So very consistent. This is a very consistent way of trading a. That's where you look at that. Bang on. 618, 160.05. You just wait for a pullback into the 618 retracement, which is a Fibonacci number, golden ratio. And then you short there. And the great thing about that is you can limit order that. The downside to being more conservative, obviously, is a... here's the thing. The more conservative your entry, usually the higher strike rate, so you're right more, but the risk-reward profile suffers. The more aggressive you are, the less right you are, okay, typically, but the better the reward risk profile. From what I've seen over time. So with a 2618 setup, at best, it's usually a 1-to-1, because what you're doing is you're putting your stop above the high and your targets are just going at a retest of the low again. Okay, so it's usually about a 1-to-1. Any questions? Any questions on that? We've spent a good half hour talking about the pound yen. That is one of the juiciest setups there. Okay, so this is definitely something I'm looking at. And just to confirm, I'm waiting for a push up into this green zone and a close that doesn't close above this, as long as I get a reward to risk profile where I'll be taking my targets. Let's just say that we close here. Okay, my stops will be going an ATR above the high, and my targets will be just above this structure resistance level. So for me, this could be a 3-to-1 almost, depending on what the ATR is at the time. So not a bad setup. And in terms of profit, it's a nice big profit as well. What times do you go live? I guess it was just Thursdays. No, I do this every day inside our tier one platform. Tuesday, Wednesday, Thursday, every week inside the tier one platform. Every now and then we stream out to other platforms. Repairs your cartilage in the shoulder. Not a medicine, but a supplement for repair joint and tendons. Awesome. Anti-Fort Plus. I'll make a note of that. Thank you very much. See, that's what's the great thing about this community. Ask a question, you got an answer. What times do you go live? Yeah, if you want to join the wealth strategy session, that's tonight. Cool. Or Saturday morning or next Thursday. There's 3 of them. And I'll be running those live, about an hour and a half, small group of people going through your current situation and your most efficient and effective path to financial freedom in the next 3 years. So, yeah. Not coffee time yet. Not coffee time yet. Isn't the bias bullish? Well, yeah, the market's bullish, but look where we are. Look where we are in the scheme of things, right? We're at this level of structure, which is likely to hold for a bit. So, although yes, it's bullish, I wouldn't want to buy beyond this red level because, sorry, this red level, because of where we're at. If we break and close above, then yeah, I'll go back into bullish mode. And by the way, whenever I'm taking these counter moves like this, I'm not greedy with targets. I'm not shooting for like a complete reversal in the trend. I'm just taking snippet of cream off of the high probability move, and then I could look to get long here. So it's a rare opportunity where I've got a chance to go both short and long. I don't recommend you do that all the time. If you try and build a system that does that all the time, you're going to go broke. Purely because by the time you're looking to get into one trade, you're looking at target areas for the other trade. And then as soon as you're in that trade, you're looking at target areas for another trade. And then you're looking to get in on the other trade. So it's kind of, you're forever, if I just, best way to explain this, and I do this a lot, but if you're in a trend and you're trying to trade the trend and the pullback and the trend and the pullback and the trend, your orders aren't going to be at the top and the bottom. That doesn't happen. You're very lucky if you catch the top and the bottom. I know everyone says buy the bottom, sell the top. No one can do that consistently that I've ever met. Realistically, there's a cluster of orders. So you have a cluster of sell orders here, and then you have a cluster of buy orders here. Okay, so let's make this red. Okay, so these are the cluster of sell orders around this area here, cluster of buy orders around here, right? Now, let's just apply this to the market going forward, right? Cluster of buy orders, cluster of sell. Can you see what's happening already if you're trying to do both? Can you see what's happened if you're trying to do both? And in real life, it wouldn't even be this, it wouldn't even be this clean cut. I'll explain what's going to happen anyway. But look at this, right? It gives you this much room in here for profits, right? This one doesn't give you any room for profits. This one doesn't give you any room for profits. These little zones in here is where you're looking to capitalize and get in and out of a trade. Make sense? This little blue zone here. That's all you've got. In reality. So if you're trying to sell the top, buy the bottom, sell the top, buy the bottom, you're probably going to break even at best. You're going to forever, and I tell you what, you'll probably be losing money because of the amount of trades you're taking and the spread difference. So if anything, your profits will be going to your broker and not to your pocket. Make sense? I know it seems like common sense when you draw it out, but most people don't go through the trouble of even drawing it out. They're just like, oh yeah, I'm going to buy the bottom, sell the top. That's what Pip Daddy told me on the forum. Yeah, it costs. What I talk about here, right, is common sense, isn't it? It's nothing revolutionary. Like, I'm not telling you guys anything you don't already know, really. I don't think. It's like, well, that's obvious. I kind of just talk about obvious stuff. But the beauty of talking about obvious stuff in this industry is no one uses their head. No one uses their common sense. So it's like revolutionary. All you have to do is talk common sense, and it's like, wow. And look, it's not a problem. You know, it's understandable that it's like that because of all the crap out there. Which is why I started this room in the first place. I just wanted to sit here, go through my own analysis, go through my own trading, show you guys how I was making money consistently, and then explain it in a way that was kind of non-arguable, if that's a word. And see what you guys thought. Can you give me some advice about growing a small account? Yeah, focus on percentages, and then just keep doing it. I'll give you my advice. I'll give you my advice on growing a small account. All right. Here's the thing. How can I draw this out? I love drawing. I'm like the Bob Ross of TradingView. Where's my crimson red? Okay. As you learn to trade, okay, if you're learning to trade, bear in mind that is high speculation, and you are going to be required to put in the most amount of effort, most amount of time, and, you know, it's going to potentially be the most stressful for you, as opposed to some kind of passive investment strategy, right? Where you just give someone else your money to manage, maybe an index fund where it's more kind of guaranteed fixed income returns, but very low returns or lower returns. I say very low returns. Most people can't beat 10% a year, even on their trading. So what you've got now is you're facing a period of time in your life where you've got to put in a lot of time, a lot of effort, and learn a skill, okay? Now, this is why it's important to have a long-term objective, because if the long-term objective is to prove your performance and get a certain percent per year, okay, putting in 2 years, 3 years to prove that is not going to be a big deal for you, because you've got this goal where you're going to demonstrate your returns and then maybe go and get investment, or it's going to give you the confidence to kind of release equity or release cash from your business or whatever and put it in because you know you can accelerate your wealth, okay? The other reason you might be doing it is because it's a better return than anything else, okay? So you either put $500 into a bank and get 1% a year, you put it into an index fund and get 10% a year, or you put it into a stock and get 15% a year, or you put it into a property and get 5-7% a year, or you put it into a Forex account and do 15, 20, 25, 30, 40, 50% a year, whatever you guys are doing, right? So there's a choice. Now, why wouldn't you do that? Here's why you wouldn't do that. If you're not looking to excel, like if you're not looking to aggressively kind of manually put money into your trading account and pump your trading account full of liquidity, and you're just looking to grow the capital because it's a better return than anything else out there, you then have to weigh up, is my time and the amount of time I've got to do to learn it and to manage trades and all that worth the difference? Or can I put it into another business? Can I start a business with this $500 or $1,000? Can I put it to work elsewhere that's going to free up my time? Or can I just accept lower returns on that capital because it will allow me more time to build a business? Right? So that would be my advice. Weigh it up. Weigh it up. You are usually going to earn more money building a business and investing the profits into, passive investments than you will learning to trade if you don't have the patience to demonstrate good returns. Right? And that's the truth. Now, just a last point on that. And don't take this the wrong way, okay? But this is universally true from what I've seen. If you have a low amount of capital, okay? So if you have, let's just say you've only got $500 to your name. The last thing you want to do, really, is go straight into trading. And I'll tell you why. If you've only got $500 to your name, it means that you haven't got a value on wealth building, which means that there's some issues with how you spend money and earn money. But it also means you haven't figured out how to generate wealth yet, all right, through service or business, which then injects the problem of when you do, let's just say I handed you $1 million. Let's just say you've only got $500 to your name, but over a 12-month period, you've demonstrated to me that you can do 25% a year, okay? I then give you $1 million. If you've never had experience pulling money out of the economy ever, do you think that trading is the best way to go about that? Do you think you're going to be emotionally mastered pulling large sums of money, 20, 30 grand out of the market at any one trade by clicking some buttons on a candlestick chart? Probably not. Probably not. So I would say this. First, figure out how to create income, right? Second of all, figure out how to manage your money so that it grows regardless of learning speculation. And then bolt speculation on. Bolt on trading, and then do the whole lot. Manage the whole portfolio. Manage the whole liquidity system. This is exactly what I teach in my Tiers of Freedom program. That's what the strategies, I'll be going through that exact process in the strategy session later on today. So there's a link in this chat. You can book onto that session. I'll be teaching you exactly how to build that. But the reason I share that with you is because that is another reason that traders fail. They go into it at the wrong time. Whereas it might take them 5, 6, 7 years to master. Whereas if they just did the first step, it will take them, a year, 2 years. Scotty says, I'm 20, trying to be an entrepreneur. I'm starting early. That's great. Amazing. Amazing. Keep me up to date, Scotty, with what you're developing, what you're working on. I'll be interested to hear. All right, let's. I think we're just going to take a look at some pound pairs today, because we've looked at pound yen. Let's just quickly. I know we looked at a butterfly here on the. Oh, we already looked at this. Let's go to. Yeah, I was hoping for a higher close on this earlier, but we didn't get one. Yeah, let's talk about pound Aussie next then. Let's talk about pound Aussie. We've done pound yen. The pound pairs are where it's at this week for me. So this is opposite direction. This is a bearish setup. We've broken and closed below major structure. Next major level of structure is down here. So let's bring this horizontal line right down to here. That means we've got room for potential movement for targets. It also means we're making a prediction. Where's price likely to go? Here. How's it likely to get there? Well, we could see market go straight down, which it tends to do at the moment, the way that market's moving at the moment. Or we see a little pullback. Where's it likely to pull back to? Previous structure support becomes resistance and then push down. So there's our prediction. Now, we need to now have a strategy so that we can decide to get involved in one of those or both of those. So if you just trade like sell stop orders in the direction of the move, then you might have an opportunity here. Or on a lower time frame, you might have a bearish flag pattern, which I'll go through in a moment, and you might be able to trade a break to the downside. But at the moment, it's looking like we need a pullback. Where do we need a pullback to? Or at least previous structure support becomes resistance. So let's go down to a trading time frame. And look, we've got a nice little structure shelf here for stops. So if we push up, whoops, that's the wrong arrow. If we push up to this zone here, we know that if we were to get a stop above here and a target down here at a short position somewhere, we can start looking at what our risk reward profile looks like. Remember, this would be target ones. Target twos would be down here. And we can trail to that. And we can use lower time frames to trail to that as well. We've now got a zone. Okay, now it doesn't mean I'm going to wait for price action to push into there and then enter. That's ridiculous. I'm going to wait to see how price behaves at this level and then look for my entry technique. So what I'm going to do here now is just add an alert. So I'll get a little notification bell come on. Why is that set there? That's not where I wanted it, is it? Ugh. That's weird. Oh, it is there. Okay. Yeah, that's the price movement, isn't it? I can't see the alert. Is it a different color or something? Let's color it blue. Oh, that's the horizontal line. Oh, I don't know where it is. Maybe it's in the horizontal line. Yeah, it's in the horizontal line. Anyway, that's kind of where I want to look at the eyeing up entries. And then when we push up there, then I'll start looking for either a lower close or a double top on a lower time frame at the previous support level. So right here. You guys can go and watch the whole strategy sessions that I did on this continuation strategy. There's 5 videos on this on the YouTube channel. Jason Graystone trend continuation strategy. Steven says common sense is unfortunately not that common. I know. Kim says, so when retesting the top for the double top, you're looking to reach the wicks of the bodies of the previous candle. Yeah, the high wicks. The high of the candle wick. In other words, the wick above the open and close. Great advice, says Lewis. Darwood says, or maybe evaluating self-skill, and if Forex is something a person is much more skilled than other skills he has in his portfolio, then for sure Forex should be first thing. What you say? Yeah, look, I would, personally, the way that I structure my wealth building is, and my whole portfolio is, I've never ever had the majority of my liquidity in speculation. It's at max, it's been, well, almost 60-40. It wasn't technically 60-40. It was more like 70-30, but I had majority of my speculation allocation in Forex. Okay, so you guys are familiar with how my liquidity system's structured, and I've got tools and everything that kind of calculate it all for you and how to not max over risk on any one's investment so that the whole thing grows as quickly as possible. And you guys that have been on the strategy session would have seen that. But there was a period of time, I think it was 2014 to 2017, I was about 60, almost 60-40 in my Forex account. So that's the most I've ever gone. I recommend for most people, you keep, no more than like 20% in speculation. And I don't, that's not something that I'd love to say. It's just something that I've seen statistically, you're going to be better off. And I'm not saying you're going to meet the stats of failing traders, but you can't argue with stats, right? Most people can't outperform fund managers. Most fund managers can't outperform the market, sorry. So there is like, the stock market goes up 10% every year. Can you do 10% or not? Because if you can't, you've put in a lot of skill and effort and energy and risk and stress just to say you're a trader, and time when you could have just done none of that and got 10% a year and spent all your time doing whatever the hell you want to do. Had all that free time, all that time you spent learning to trade, you didn't have to do it. And most people can't do more than 10%. That's the truth. And I'm not talking about having I'm not talking about having 100% day, 100% year, whatever. Like show me in 20 years how much you've earned. It'll be less than minimum wage, I promise you. Seen it too many times. Over a 20-year period, you'll average out at less than minimum wage. Mr. Jason, can you give me a good signal service provider? There isn't a good signal service provider. That's not even a thing. It doesn't exist. How can there be a good signal service provider? The whole fact that you're taking signals is flawed. The key to profitable trading is consistent trading. If you're just taking trades off other people's ideas, how is that consistent? How are you even journaling it or comparing it to historic performance? How are you, like, why trade? Why don't you just go down like the betting shop and get a tip for the best horse? That's exactly the same. That's what you're doing. Give me a tip on the best horse. Any advice when passing FTMO? Yeah, you want to hope that you got as lucky as you did on the way in. I'm sorry. I really don't know how to answer these questions anymore. FTMO are incentivizing you to get into trading by making a return within a time period, which is stupid. It's luck. So if you want advice on what to do once you get in, is you've just got to hope you was as lucky as you was in the challenge. I'm sorry. Like, if anyone can prove me wrong or like have an argument against that, let me know. I'm really interested to hear the arguments. I really am interested, honestly. I do want to hear opposing opinions. It's obvious to me. It's so obvious. Like, that is a stupid business model. A great business model for them, but it's really pulling the wool over people's eyes. And it's like, you know, Little Red Riding Hood, when the wolf's like dressed in the thing. That's what I look. FTMO companies like that are like that. It's like a wolf in sheep's clothing. I always was a lucky. Go for it then, Andrew. Yeah, it's only truth in here, I'm afraid. I know some of it is quite, you feel like you've been slapped in the face a little bit, but I'm sorry, I can't sleep at night if I just tell you what you want to hear. And I don't care about your sleep, I care about my sleep. So that's what I'll continue to do, I'm afraid. And absolutely, if you've got an opposing opinion or some kind of statement to the contrary of what I'm saying, I'd love to hear it. But to date, based on the way that I talk and the information I share and my opinions, I haven't been challenged. And I've been doing this for 6-7 years now on YouTube and out to the world and sharing my thoughts to the world, and I haven't yet been challenged. And you know what? My hope is that you're watching this live session and you go, yeah, actually, I don't think trading's for me. Because if you've got a slight inkling that it isn't for you, good. You know, get out, do something, put your money to something else that you're going to be good at. If you want to be good at it and you know you can do it, then great. We've got all the tools, all the support, the coaching, the mentoring, everything you need to be profitable. And, you know, come on in. But if you can't, then honestly, don't bother. Check out MMC from South Africa. He can grow $3,000 into $2 million. Oh, God. Oh, I'm sorry. I'm sorry. I think it's coffee refill time. I can't take any more. I need to have a little breather and a break. Let's go for a coffee break. We'll take 13 minutes on the clock. Actually, 12 minutes. We'll come back at 8:40. Okay, back at 8:40. Grab a coffee refill, whatever it is you're going to grab, and I'll see you in a moment. All right, guys, welcome back to the second session of today's live room. A few things in the break that I want to address. One, Rudy in Tier 1 says, Euro Aussie, Euro New Zealand have been the same bearish pattern. Do you think it will take lower because of bullish Gartley there? I know that Ukraine make Euro move to move bear. We'll take a look at that in a moment. On Instagram, Ben says, guys, this is a fake account. Actually, this isn't a fake account, but there is a fake account. And then Dat says, duh, why would a fake account be live? Yeah, this is definitely the real account. This is the real me. It's not a deep fake. It wouldn't surprise me now, though, with all the... Has anyone seen the Tom Cruise thing? That deep fake stuff. Man, that's frightening. Anyway, there are lots of fake accounts. If you type Jason Graystone into Instagram, you'll see tens and tens, if not hundreds, of fake accounts. And this is the only one that's real. Okay? This is the only one that's real. So... this is the real account. Please report any others. And I certainly don't contact anyone on Telegram or Discord or WhatsApp or Facebook Messenger or anything like that. If anyone's contacting you saying they're me or anything like that, it's not me. I promise you. I've got much better things to do than to message people all day long trying to get them to invest money into some scam. How do you know which pairs to trade? Secondly, do you ever use COT report? You know which pairs to trade. Obviously, you don't know which pairs to trade when you're first starting off. So the first thing you have to do is learn a strategy, understand the ins and outs of that strategy, so know it off by heart, go and then practice it in the real live markets, identify the strategy playing out and the setups, go and test it to ensure that it's profitable, and then test it across multiple markets. And I would advise starting with the major, if you're talking about Forex, I would start with the major pairs. So, anything with the dollar, ideally. The dollar is still the base currency of the world. So you want movement, basically. If there's no movement, you're not going to have much fun testing anything. So the dollar, anything with a dollar in it, start there. Aussie dollar, pound dollar, euro dollar, dollar yen, dollar CAD, all these kind of dollar pairs, start there. And start testing it throughout a series of markets. And then you'll start to identify which pairs are profitable and which ones aren't. And you'll also start to see, what ones perform really well and what ones don't. Simple. What other ones? I only need something that gives me profit at the end of the day. I can't sleep when having a loss for that day. I need a small win each day. Yeah, that's a recipe for disaster, unfortunately. Yeah, I've had losing months. So I don't know how you're going to find something that wins or is in profit every single day. That's you're chasing a golden goose, I'm afraid. How can we make the most from the Tier 1 trading program? There's a 90-day planner. When you join Tier 1, you get access to a 90-day planner, which maps out, an order of which you should, go about your activity in there to get, to hit the ground running. FTMO is flawed. But if you can hit 5 to 7 R consistently, you know your edge well, and you can identify optimal market conditions when your strat performs best. Risk 2%, per trade. Pass the challenge is an option. That is me staying on here because I think Instagram is a bit delayed. You promised me Bitcoin, Jason, says Phil. Hello, Phil. Good to see you. Oh, look at that. We've hit 100 messages on here. Brian says, I'm not sure if this is coincidence, but I was actually just thinking that I need to cut down my pairs list down to about 4 or 5 and not try looking at 20 pairs at the same time. Yeah, so look, I don't know if you guys know how to use pivot tables, but you can set up pivot tables in your spreadsheet and just combine all of your testing or all of your journal trades into that one pivot table and start mapping out what pairs perform best and at what times they perform best, and then just build a portfolio based of fewer pairs but higher profit. That's the beauty of testing. This is another, I could go on and on for weeks about the benefits of testing and having journaled trades. It blows my mind that people don't do it. I don't know why you wouldn't do it. You're not, the whole time you're not journaling or, recording your trades and reviewing your system, you're just wasting time. You're literally not getting anywhere with your trading. Because the moment you found that system to be profitable, whatever it is, it's losing its profitability. It's deteriorating. Ada going crazy. As I tuned into your live, you were talking about the same topic. Yeah, look, do less. Everyone wants to do less. Yeah, everyone wants to be more passive. What is that where, when, how thing you ask yourself when identifying and predicting? IPDE, identify, predict, decide, execute. That's just a 4-step process that we stick to for consistently objectively approaching a subjective market. It's just a process to follow. You don't have to call it that. You can call it what you like. You can kind of have your own way, but the point is you need a consistent way of approaching the market. Gold used to be my top pair, but then as I started trading a small account, I actually realized that it's better to select currency pair, which is less volatile. So my stop loss is a less pip range. There you go. Perfect example. You need to put a watermark on the chart saying, please backtest. Look, I don't care. I don't care what people do, really. My goal is to stop you from losing money unnecessarily and taking the right approach to trading. Now, I'm not one of these that says, you're mad if you don't backtest, you're stupid if you're just, out there just taking signals. I've got no problem with people that want to have a bit of fun in the markets and blow some money. I've got no problem, because it's no different to the people that go in the betting shop or down the horse track or the dog track or whatever it is, or the casino. No problem. But as long as you know that that's what you're doing, don't expect to be profitable. Understand that you are gambling, and that's fine. That's fine. Have fun with it. Blow some money, take some signals, place some bets, get some tips, because that's what a betting shop is, right? If you want to be a professional trader, you have to build a trading business. You're supposed to make a video about all the stuff journaling. I only said that yesterday. Give me a break. It's coming. It's coming. Jeez. Cool. Yeah, look, you can ask whatever question you like in here, and you'll know that you're going to get, my honest opinion. I'm not going to say anything to make you feel good or make you feel bad. I'm just going to share with you honest advice based on a pretty qualified historic sample size of working with traders, my own development on human evolution, human psychology, mathematics, science, results. Yeah, I will make a video on journaling. I'll be doing it over the next few days. Okay, it'll be out next week. And that video is coming out today on the prop firm. Sana Benin, how you doing? Rudy is looking at a setup on, what's this? On the Euro Aussie, which is what's called a cipher pattern. I can't see what time frame that is. We'll soon find out. Euro Aussie. Absolute textbook. For those of you familiar with cipher patterns, absolute textbook. There. All right. So we've looked at pound yen. That's kind of one of the juiciest setups. I don't know what's going on with my charts here. It's having a bit of a headache. So we've got a nice setup here on the pound yen. Thanks for being actually a free educator. You're welcome. Is cipher like a butterfly? Yeah, all those ratio patterns are basically just a series of ratios in order with different rules between X legs, A legs, B legs, and C legs, and D legs. And they're just differentiated by having different rules of engagement and therefore different names. Hello, Jason. I just got on. Can you briefly explain the strategy that you have on your chart there? The uptrend. Yeah, this is an actual counter trend structure-based short if we get a double top entry, which we don't have at the moment. You've got to be careful here because you've got to make sure. Yeah, we don't have that at the moment. So it's a double top entry for a short down to here. Cipher is different than a butterfly. Yeah, they're all different from each other. That's why they've got different names. When do you think the best time to try and get funded is? 3, 6, 12 months of consistency. Look, the longer the better, obviously. That's going to give you the highest probability of getting funded. You can do it in less. You can do it in 6 months. I wouldn't say 3 months. You can do it in 6 months, but what they'll really look for is volatility in your equity curve. You know, we don't want to see big swings in your equity curve. When you're getting funded, right, what you're doing is you're getting investment. And an investor wants security on their capital, right? So they're looking at what's the return? When is the return? How much loss do I have to endure in order to get that return? What is the biggest loss? What's the longest period in a drawdown? Right? How volatile is the trading style? How consistent is the trading style? right? What's on the line for this guy? Where's the skin in the game from this guy? So you have to have all of that in mind. So if you're going to go 12 months, obviously same thing applies, but you've got a bit more leverage there because you're 12 months consistently profitable, which most people can't be. And if you're 12 months, they're going to look at frequency of trades. They're not going to say, well, you did 10% on one trade and then you didn't trade for the rest of the year. That's not really going to, that's not going to pay off. They want to see consistent trading. And then if it's 6 months, they really look at the equity curve, the volatility in swings. Do you think that trading is for everyone? Absolutely 100% no. Do I believe anyone can trade? No. What other questions are there? I think that's it. The cipher pattern was discovered by my partner, Darren. Darren Oglesby, he was testing Gartley patterns, and then he came up with this idea that every time there was a failed Gartley and we extended, we'd see this big push down, and then there was a high probability rally at a decompletion. And he started testing it, and then he gave it out to the mastermind group to test to make sure he wasn't going nuts. And we found it to be one of the most profitable patterns that exist, or that are commonly known. The cipher pattern has up to a 72% strike rate on some of the pairs. Aussie CAD on the hourly. If you want to go and test it, go and test it on the Aussie CAD hourly. It's 72% strike rate for me. So it's a good setup. How many trades do you roughly make per week? 3. You got to want it badly. Yeah. Prop firms risk nothing. Like, yeah. They do have a risk, limit. They have a risk appetite profile. And at the end of the day, they are professional gamblers, right? They're professional risk managers. And in part of that risk is how much are we willing to lose on this trader for the potential return if they come good, or if we can mold them good. And it's like, can we swing once? Can we swing twice? Can we swing 3 times and miss? And for a normal business, it's kind of like Facebook ad spend, right? How much can we lose on this advert and still be profitable? How much money can we pump into this campaign to see a return out the other side? And it's no different to weighing up that kind of risk management. What time frames do you find work best for your style? Well, forget my style. Anyone else's, like, my rule of thumb is if you can't check the charts more than twice a day, stick to the daily time frames. And I mean consistently. Same time. If you can't check more than 4 times a day, stick to the 4 hour. And if you can check all the time, you can consider the hourly, but I wouldn't learn on the hour. I personally, unless you've got lots of time, you're going to want to make sure that you've got access to the charts all day if you're trading on the hourly. What if you just need coaching and you already have a way of trading? Does Tier 1 cater to that? Yes, we've got many professional traders in our community. We've got people that have started their own prop firm in our community. We've got traders that have been trading longer than I have in there. Tony's one of them. If you're a recently funded trader, is there added pressure because it's other people's money? Of course. Having said that, there's one guy who's a bit of an anomaly that I met at S&B Capital, and he's one of the traders there. He's one of the top performing traders there. And when we was doing the conference, we was on the stage, I was on the stage, he was on the stage, and we was doing a Q&A. And one of the questions he got was, do you find it hard or more pressure pulling the trigger, knowing that you're managing so much capital, high volume, high capital? And he said, no, I find it easier because it's not my money. And that's what he said. He was like, Mike's face was a picture, but he was like, no, it's not my money. I just press the button. But for most people, I think it's fair to say that it's harder. There's an added pressure. And if you're going for private investment and you're managing money, I would not recommend managing families' money or anything like that. Remember their expectations, okay? They have got the silly expectations that most people have got towards trading. Oh, where's my returns? How is it doing? Oh, is a pound going up today? They're going to be on your back. So, one, you want to consider having a watermark-based performance system. Okay, if you don't know what that is, we teach that inside Tier 1. How to manage money. How to manage money for other people, a watermark-based system. So that's performance first. Okay, so your best interest is with getting returns for the client, and you only take a profit when you hit a new high watermark, and all the numbers and figures are worked out inside Tier 1. Second of all, make sure that you've got a contract in place where they're off your back. They understand that the money they give you is good as gone. They should never risk money that they can't afford to lose. They are, not to check in with you for at least 6 months to a year. And you really don't want all that pressure. You don't want them involved at all. They're investing in you, so they should have no say. Because if they have a say, that means you're changing your system, which means you're breaking your expected results, which is going to have Akil did this. Akil took on he managed some money for a guy, and I think he started off with 250K, and then he was managing 250K. He was going for a winning streak. He was being quite conservative, but he was going for a winning streak. And then the guy said, look, you're doing really well. I want you to be more aggressive. And that got to him a little bit. He did what the guy said. And because he went, he'd just come off the back of a big winning streak, what comes next? Drawdown, right? So he increased the position size, went straight into a drawdown, 30 grand lost off the table straight on the, first couple of days. Couldn't handle it because he knew that he wasn't doing what he'd prepared for. He wasn't doing what he knew and liked and trusted. He was now going away from what his expectations were, which has a massive impact on your mindset. And then, big falling out, give the money back. Don't want anything. Don't want to do it anymore. So yeah, again, common sense. If you're trying to snipe trades, go to 30-minute, 15-minute, but for longer moves, it's 4-hour, 1-day time frame. Yeah. I would ask yourself again why, before you try and do lower time frame trades, best question you can ask yourself is, why do I feel the urge to have lots of trades? Because I can tell you, you don't make more money by having lots of trades. There's no correlation between how many trades you have and how much money you make. How long you spend in front of your charts and how much money you make. There's no correlation. Zero correlation. You can build a system where you have, 3 trades a year, 5 trades a day. Make sense? So the first question is, why do I feel like I need to have so many trades? That's the question. And that could be quite a damaging thing. You could be revenge trading. You could still have the time for money mentality, which is, shouldn't be applied to trading. If most people want passive income, why do you want to spend more time at your charts? And you might want to because you just, you love it and you want to spend all day at the charts, but I don't know. Just ask that question of yourself just to make sure that it is that. Because you might find yourself, you've got an agenda. You've got a hidden agenda. You've got a motivation that you haven't brought to the surface just yet. The mic's cutting out. Is it? Is the mic cutting out, everyone? That's odd. Cool. No, must just be your end, John. Any other questions? We're having some good discussions in these live rooms this week. I know there hasn't been like too many active trades, but this is all part of it. This is important because most people can't even handle this. They can't sit there for a week and go, I've had so many close calls, no trades, you know, I must be doing something wrong. Cheers, Duncan. Okay. Here's some questions for you guys then. And not so much the tier 1 members, but the other guys watching this. How many have been... So I want to know how long you've been trading. And I mean like learning to trade in trading. Okay. Type in 1 to 2 for 1 to 2 years. 2 to 5 for 2 to 5 years. Or 5 plus for over 5 years. Just so we can kind of see where we're at in the group. And if you're in tier 1, you can do it as well. But I'm just interested. Type in 1 to 2, 2 to 5, or 5 plus. Just let us know. 1 to 2, 2 to 5. Oh, it's a nice mix, right? 2 to 5, 2 to 5, 2 to 5. So 1 to 5 years, right? Under 5 years, people have been trading. Probably 1 to 3 or 1 to 5, 1 to 4, something like that. 1 to 3 years. Great. Now, another question for you guys is, what is your... There's probably about 6 problems, okay? What is your biggest struggle with trading? And you can type it in your own words. Try and get it into like 2 or 3 words. What is your biggest problem or struggle or hurdle with trading? Aldoli12 says 5 plus. Yeah, you've been around for a while, especially in the room and the community. Right, what is your biggest struggle, problem, hurdle, challenge when it comes to trading? So in the tier 1, we've got consistency, trading psychology. What specifically in psychology? Like what is the problem? What's the result problem? What is that causing you to have a problem in? Like what's the action you're taking as a result of trading psychology being a battle? Patience, getting into a trade, execution, FOMO, fear and greed, trading psychology, fundamentals, stop loss, proper risk management, over trading, learning concepts and applying them, miss the news and trades go wrong, greed, growth equity, greed, FOMO, discipline, consistency, entry techniques, being patient, discipline, proper journaling, respect your own strategy. That's a massive one. Pride, consistency, risk management, fear of missing out, strategies, discipline, consistency. It's always the same thing. Now, the reason I want to ask that question in front of everyone, because you're seeing it blow up on the chat here, you know, it's very transparent. You're not the only one, right? Now, what I want you to do is look at all those answers. One, that should be quite relieving, right? Two, there's a massive common theme there. And what you need to ask yourself is the way that I'm trying to learn and are the people I'm listening to in favor of helping me overcome that challenge or those challenges? Because you will only have a problem with your emotion or, whatever, when the reality doesn't meet your expectations. So if you're expecting to not be greedy, and you are greedy, then how are you being taught? Because however you're being taught is setting the expectation. So if you're watching people on Instagram with Rolexes on their bed and cash on their bed, your expectation is greed. If you're watching some influencer on Instagram, some guru, right, scalping trades, paying the broker, then your expectation is to have lots of setups. If you're seeing an influencer on Instagram flashing Ethereum, Bitcoin, NFT gibberish, fear of missing out, you're going to have fear of missing out. However, if your teacher or coach or mentor or trading community keep you poised and grounded and neutral and balanced and help you grow as a trader that's going to be long-term and sustainable and highly profitable over a long period of time, you're not going to have, that's going to be your expectations. And you're not going to have those missing voids of greed, FOMO, pride, poor risk management, poor journaling. This doesn't happen. And then the goal just becomes inevitable. And then every step is like the step that you can see in front of your eyes. And you just chip away and you keep stepping forward, and you get there. And you don't get distracted. Because distractions cost you time and cost you money. They set you back. And that is going back to the first question. It's like, how long does it take you to trade? That's going to be the difference between it taking you 1 to 3 years to 1 to 10 years. Because you'll just keep going round and round and round. Whereas if you can just focus on a bit longer term and delay gratification a little bit longer, you'll get there quicker. It's crazy, but that's how it works. Ryan says, great exercise. Nice to be part of a community of people focused on progress. Yes. All on progress. Celebrating progress, not wins, not necessarily hyped up kind of anomalies, unicorns. Focused on progress. Celebrate progress. Celebrating progress can be as simple as, I didn't take a trade today because I've stopped because my system isn't profitable. I don't know it's profitable. That's a celebration. That's progress. All right. So let's look at one more pair. All right. Let's look at one more pair because we've been going on for almost 2 hours now. And I know the streams, I don't know how the streams are favored. But pound Aussie, look, there's not really much to talk about at the moment. I'm waiting for a pullback up to this alert line. Pound yen, we're looking for a double top for a short. Let's look at dollar yen. Okay, let's look at dollar yen. Dollar yen, we have broken and closed above. We had this trade where we shorted down to support, in out, a counter trend in a bullish market. Let's go out to the daily. This is a strong bullish move. Anyone agree with that? Got this breakout. Right, breakout to the upside. Now, we're hitting 122 flat now. Look left. 122 flat. Horizontal line at 122 flat. We can agree that that is a nice level historically. Right, we've already kind of shown you some of this. Pound yen was very similar as well. And we went through this yesterday. 2016, 2014, 1, 2, 3, 4, 5. 5 previous tests of that level. 122 flat, even handle number. Big bullish run, can't go on forever. RSI massively overbought, up at 95.83. Now is a great opportunity to look for a counter move. We can already see deceleration here. This is deceleration. Ascending channel. Have we got an ascending channel? Right? Some of you might be looking at this as an ascending channel. Others might just be looking at an entry up here. How can we enter? Double top. There's your double top. Very, very simple. Just to give you guys an example, you'd literally just place a trade right here. Create new order. This would be an at market order, and you'd sell this straight in. And there's your entry. Okay, now first thing you want to do is get the stops in. Stops are going to go an ATR above the high. So I know that we're going to go at about 90. So just above 90. Let me just double check that. 90, 121, 92. Okay, there's your stop loss. And then what I'm going to do is go back out and look for targets. Okay, we're going to get a target just above. It's not the nicest, but 121.41 for targets. 121.41 for targets. Whoops. And there you have it. I'll probably tighten up that stop loss a little bit. Let me just double check the ATR. 168. The high is 175 and 182, not 192. 182. There you go. And that's a nice, let me just show you what that would be profit-wise. So we've got a risk-reward profile of almost a 2-to-1, which is nice. And then a high probability setup. We've got a double top entry. Can't go on forever. Like this bullish move cannot go on forever. We've got a double top entry, which met all the rules there. RSI overbought on the first test. Bearish divergence on the RSI. Equal tests on price. And there you have it. There's the entry. So let's see how we go. Any other questions? Nice way to finish off the live room with a little trade there. Prasant says, have you looked at dollar yen yet? There's dollar yen for you. Someone mentioned euro. Who mentioned euro? Euro Aussie, Euro New Zealand. I think we looked at Euro Aussie, didn't we? Yeah, Euro Aussie we looked at. Euro New Zealand. Love this live for my first time being here. Excellent. Amazing. Yeah, very similar. Very correlated, these two. Just go out to the 4 hour. You'll see very, very correlated. Euro New Zealand and Euro Aussie almost identical in terms of correlated moves. So what about Euro Yen? Euro Yen. This is the setup from the other day. Let me go out to the daily. Move drawings. Euro yen on the daily is in consolidation. Okay, and there's definitely nothing too exciting other than a structure-based short. I wouldn't be too interested in anything else. Structure-based short, running out of steam here. Similar situation to what's going on the dollar yen. Not as attractive as the dollar yen. But if you're a pattern trader, you've actually got an aggressive shorting opportunity here. You just literally X, A, B, C, D. And this would be what you call a butterfly setup. Again, which I don't trade. Took a double top on that 240 at that level yesterday, says Prasan. Excellent. Yeah, so pound yen, pound Aussie, they're the juiciest setups. Dollar yen is a trade that is also nice. We're in. Dollar yen doesn't like to behave like other pairs, so we'll see. But that's the trade we're in. Any other questions, let me know. And I hope you guys have enjoyed this week of live streaming. If you want to join us every week like this, you can come into the Tier 1 trading platform, and we do it inside the platform every day, Tuesday, Wednesday, Thursday. And then we have an accountability session on Friday. Akil does a dedicated hour-long Q&A session on Monday. And yeah, great place to be. Any questions before we... Yeah, great session. I enjoyed it as well. Any questions that I've missed here? Let me just double check. Thank you for the stream. Please share the link. Broker? Yeah, there's my broker and tier one trading.com/free. There's tier 1. And don't forget, guys, the strategy session. If you want to get in on one of those tonight, you can come in 5:30 UK time. We'll spend an hour and a half together going through your own plan with a small group of people. And I'll see you then. Until then, take care. Have a great rest of your day. And I'll see you tier 1 guys in the platform. And I'll also see you in Akil's live room in a couple of hours time and a few hours time. And also I'll see you in the accountability session tomorrow. So take care, and I hope you learned something. I'll see you then.